Have you ever wondered if there's a quick way to get rich using math? What if I told you that there's a formula that could accelerate your wealth building process? In today's video, we're diving into the so-called mathematical formula to get rich quickly and asking the crucial question, does it really work? With years of experience helping people organize their finances, I'm here to guide you through whether these formulas are fact or fiction. Most people dream of becoming wealthy quickly, but achieving this isn't as simple as some may think. The allure of get-rich-quick schemes or the idea of a fast-track formula to wealth is tempting, right? But often, these schemes promise something that sounds too good to be true, and in many cases they are. You may find yourself working long hours, saving here and there, but the dream of financial independence feels far away. Maybe you're overwhelmed by the idea of how much money you need to retire comfortably, or you feel like you're stuck in a cycle that's hard to break. In the quest for wealth, we often look for shortcuts or magical formulas that promise to change everything overnight. But the reality is that building wealth is a process. So, does a mathematical formula for getting rich quickly really exist? Or are these just fantasies created to sell books, seminars, or investment schemes? What if I told you that while there is no one-size-fits-all formula, there are proven mathematical principles and strategies, such as compound interest and consistent investing, that can significantly accelerate your journey to financial freedom? Let's break it down and see if math can actually play a role in your path to wealth. Let's get started with understanding why those quick formulas are often too good to be true. When it comes to getting rich quickly, many people look for a mathematical formula that promises immediate results. But the truth is, there's no one-size-fits-all answer. However, the concept of building wealth is deeply rooted in mathematics, primarily through principles like compound interest, consistent saving, and smart investing. The formula for wealth accumulation involves making your money work for you through steady, reliable growth. Start by investing small amounts consistently. Even modest contributions can yield substantial results over time thanks to the power of compounding. So while there's no magic trick, there are proven ways to use math to grow your wealth smartly. Get-rich-quick schemes often seem like tempting shortcuts, but in reality they usually lead to more harm than good. These schemes prey on people's desire for instant wealth, offering promises of huge returns with minimal effort. The truth is, these schemes are usually based on speculation, high risks, or outright fraud. Whether it's trading, multi-level marketing, or betting on volatile markets, the odds are stacked against you. Avoid investments or opportunities that promise fast returns with little effort. Focus instead on steady, consistent strategies like saving, investing in diversified assets, and making calculated risks. Real wealth is built over time, through discipline and smart choices. Compound interest is one of the most powerful tools in wealth building. It's the process where your interest earns interest, creating a snowball effect that accelerates the growth of your money over time. For example, if you invest $100 at an annual interest rate of 5%, you'll earn $5 in interest after 1 year. The next year, you'll earn interest on $105, not just your initial $100. Over time, this leads to exponential growth. Start by investing consistently, even in small amounts. The earlier you start, the more you'll benefit from compound interest. Compound interest can be your best friend in the journey to financial freedom. Time is perhaps the most powerful asset you have when building wealth. The longer you invest, the more compound interest can work in your favor. This is why it's crucial to start as early as possible. For example, if you start investing at 25, your money has decades to grow before retirement. But if you wait until 35 or 40, you'll need to invest much more aggressively to catch up. Don't wait for the perfect moment to start investing. The best time to begin is now, no matter how small the contribution. The earlier you start, the more time you give yourself to build wealth. While high-risk investments can be tempting, they often come with disastrous consequences. Many people fall for the allure of high returns only to find themselves losing money quickly. These speculative investments, such as day trading, cryptocurrency without research, or pyramid schemes, are incredibly risky. In contrast, steady long-term investments in diversified assets tend to provide more consistent returns. Focus on building a well-diversified portfolio, balancing risk and return. Invest in proven strategies like index funds or bonds, and avoid risky schemes that promise fast wealth. Building wealth takes time and patience, and high-risk speculation often does more harm than good. Diversification is key to protecting your wealth and ensuring consistent growth. By spreading your investments across different asset classes, stocks, bonds, real estate, you reduce the risk of major losses from one single investment. For example, if the stock market takes a downturn, your real estate or bonds can still provide stability and income. Diversification helps you weather market volatility and lowers the overall risk of your portfolio. Evaluate your portfolio and ensure that it includes a mix of different investments. Regularly rebalance it to maintain diversity. Diversification doesn't guarantee success, but it significantly reduces your exposure to risk. One of the most overlooked factors in building wealth is the impact of fees and expenses. High fees from financial advisors, mutual funds, and active investing can significantly eat into your returns over time. Even a 1% annual fee can reduce your returns by tens of thousands of dollars over the course of a few decades. For example, if you invest $10,000 with a 1% fee versus no fee, over 30 years, that 1% fee could cost you thousands in. Switch to low-cost index funds and ETFs to keep more of your returns. Review your investment fees regularly to minimize them. Lower fees mean more of your money stays in your pocket, helping you reach financial independence faster. Your mindset plays a crucial role in achieving wealth. People with a wealth-building mindset view money as a tool to create opportunities, not as a source of stress. They understand that building wealth takes time, patience, and smart decisions. On the other hand, those with a scarcity mindset often focus on short-term pleasures and fear missing out on quick returns. A wealthy mindset focuses on long-term goals, financial discipline, and consistency. Cultivate a mindset that embraces patience and long-term planning. Focus on small, consistent steps rather than instant gratification. A positive, disciplined mindset is the foundation of lasting wealth. Real estate is one of the most powerful ways to build wealth over time. It provides multiple avenues for financial growth, including property appreciation, rental income, and tax benefits. For example, buying a property in a growing area can increase in value over time, while rental properties provide consistent passive income. Additionally, mortgage payments help you build equity in the property. Start researching local real estate markets. Consider saving for a down payment or exploring real estate investment trusts, REITs, as an entry point. Real estate offers long-term stability and the chance to grow your wealth outside the stock market. While many people are looking for shortcuts to wealth, the truth is that there is no magic formula. Real wealth is built through consistent effort, smart financial decisions, and discipline. It's easy to be tempted by the idea of a shortcut, but the reality is that those who achieve financial freedom do so by making steady progress over time. Hard work, patience, and smart planning are what make wealth sustainable and meaningful. Commit to long-term financial goals and take consistent actions every day to move toward them. There's no shortcut to wealth, but with the right approach, hard work pays off. Building wealth isn't about finding an instant formula or shortcut. It's about taking small, smart steps every day and staying committed to the long-term process. The truth is, the road to financial freedom is built on consistency, discipline, and patience. Every decision you make today, whether it's saving a little extra or investing for the future, compounds over time. Don't get discouraged by setbacks, and never rush the process. Real wealth is built gradually, and every little effort counts. Take a moment today to reflect on your financial journey. What is one small change you can make right now to start building your wealth? Whether it's investing a little more, saving a little more, or diversifying your portfolio, every step takes you closer to your goal. Remember, it's not about how quickly you get rich. It's about staying the course and making the right choices consistently. If you found this video helpful, don't forget to like, share, and comment below. What's one financial habit you'll start adopting today to build your wealth? Also, make sure to subscribe to the channel and hit the notification bell so you won't miss out on future videos filled with practical tips on wealth building, investing, and financial freedom. By subscribing, you're taking the first step toward gaining access to the strategies and insights you need to make smart financial decisions and create the life you want. Let's make your wealth building journey a success together. Achieving wealth isn't about finding a shortcut. It's about making the right choices consistently and staying patient through the journey. The power to create financial freedom is in your hands, and every step you take today gets you closer to a life of abundance and choice. Remember, the journey to wealth starts with that first decision to invest in yourself and your future. Keep moving forward no matter how small the steps, and trust that they'll add up over time. Thank you for watching, and always remember, financial freedom begins with a single step. Let's keep building together.